Welcome to my channel. I'm the Covered Call guy, and this is my journey to creating a $120,000 per year passive income portfolio. If you are new to the channel, I'm currently yielding about $61,000 a year, just a little over $5,000 a month. So I am halfway there. Before I get started, disclaimer, all content presented in the video is for informational purposes only and should not be considered financial advice. I am not a financial advisor. Trading and investment involves substantial risk. You should consult a financial professional before making financial decisions. If you need tax advice, I am not a tax professional. You should consult a tax professional for any tax advice or financial advice. Past performance is not indicative of future results. All views are my own and do not reflect the opinions of other parties. I am just some random idiot you found online, and I could be completely wrong. Please do your own due diligence. Okay, so in this video, I'm gonna talk about why cover calls is the new income quest, right? Navigating AI, job insecurity, and the rise of high yield ETFs. This is the cover call guys review. This is my review. I've put together my own due diligence. A little slideshow here. So we're going to talk about why cover called ETFs is the new frontier, right? The traditional 1 and 3 percenters, the traditional growth stocks may not work anymore. And in this video, I'm gonna explain why. In my own views, I'm gonna explain why. All right, so let's get started. So right here, the core conflict of 2025 and probably the previous years, right? We've seen that it isn't a new problem, and it is kind of a new. It isn't a new problem, but it's kind of a new problem, right? The last 7 years, we've seen a massive volatility of 21.8 million total layoffs in 2019 to 41.7 million in 2020, and now a substantial wave of over 600,000 tech-specific layoffs since 2022, right? The difference now is not just overhiring; it's permanent and driven by AI. We've seen this. If you guys catch up on the news, right? Amazon just laid off 30,000 jobs, affecting corporate, HR, cloud operations division. So no matter what you hold, no degree, bachelor's, master's, PhD, everyone's getting laid off. Intel laid off over 24,000 jobs globally, more than 4,000 in US alone. And these are just in 2025, right? Microsoft cut about 9,000 roles, and about 9,000 roles in the US and about 7,000 globally. UPS, along with Amazon, laid off almost 50,000 positions. Salesforce cut nearly 4,000. Facebook, Starbucks, Target, Paramount, Nestle, Geico, Nike, like huge company, Nissan, PwC, ANZ Bank, right? I'm just naming off Adidas. I named off let's see what else I named off. Named off Paramount. Like these are just in 2025 alone. So you can understand like there's a fundamental shift here, right? And AI is going to be taking over most of these jobs, right? So I think that's why this has ignited an urgent large-scale search for stable, high-yield cash flow, fundamentally changing investing strategy from growth to income. All right. So if you don't know, I'm trying to reach $120,000 a year, $10,000 a month, so I can completely replace my salary. Right. So if I get laid off, I don't have to worry. I have enough income coming on per month, so I don't have to worry. Right. So I've been fortunate enough to still have a job, but who knows, right? I can log into today, log off end of the day, come back in tomorrow to log in and have an email saying sorry, no job. So cover call ETFs is the new thing now. It's no, you can still buy growth, but who's to guarantee you can even have a job to keep buying the growth stock for the next 10 years, 20, 30 years? You might even, how sure are you to even hold that job for the next 10 years to buy the growth stock? Right? A lot of analysis are calling this the white collar recession. analysis has dubbed 2025 the white collar recession. Unlike past downturns driven by economic contraction, this one is structural. It's staying, right? AI is not going anywhere, right? Corporate profits are robust, but companies are using AI to achieve growth without scaling up human headcount, right? So I hope you guys are seeing the writing on the wall, right? News are coming out every single day. All these big Mag 7 companies are just laying off people, replacing them with AI. Amazon is trying to replace all of their workers with robots. If you haven't seen that already, that's what they're trying to do. They're making it. They're telling you, right? So this marks a new phase where AI is no longer just a tool, but it's becoming the new workforce. You guys can go ahead and Google and read up on this, because I'm not trying to throw too much, right? I just put a little bit of what I read into a slide, and it's on the news. If you guys read the news, if you guys just go on Google and just type in layoffs, and you'll see, you click on these articles, and you see that humans are being replaced. Whether you have quote unquote low skill, I don't believe in low skill, but if, quote unquote low skill, high skill, all these degrees, all these IT guys, right? All the smart folks getting laid off. If people with multiple bachelor's degrees or master's degrees are getting laid off, then nobody is safe. Eventually, they're going to be replacing nurses, doctors, right? Surgeons. It's just a matter of time, right? So AI's staggering impact on jobs. 3 million global full-time jobs could be impacted or automated by generative AI. I read this in Goldman Sachs. 50% of entry levels, white collar jobs could be replaced by AI within the next 5 years. I think it's coming sooner. You're already seeing it, right? A lot of basic. If you go on a website and you're trying to trying to reach a live person, it's almost impossible, right? You get this AI agent, and then it's annoying. But that's the new reality, right? 56% of wage premiums workers with AI skills, creating a skill canyon. So basically, it's just hiring a human costs too much, right? You have to pay for the healthcare, all of the insurances, right? So an AI can work 24/7. So experts like Dario Amonodi, he's the CEO, warned AI could eliminate 50% of all entry-level jobs. We're already seeing it. I've already mentioned it. Basically, all these customer service jobs, anything that's repetitive, right? And like data entry, all these things that doesn't really would be considered too complex, but it's getting there. It's getting there, so hopefully you guys are watching this video are understanding that it's just a matter of time. All right, the job market cools 2025 to 2024 to 2025. This AI pressure is happening as well. The overall U.S. Labor market slows down. As you guys can see, when I was searching for jobs during 2019 and 2020, I was on Indeed, I was on I think Monsters, I was on a whole bunch of job sites, and I'm not even exaggerating, I'll be applying to hundreds of applications per day, and you would get back maybe one phone call to set up for an interview out of the hundreds you would have to apply to. So the unemployment rate has steadily ticked up, creating a stagnant, high uncertainty market. And anybody watching this video, I feel like if you are looking for employment right now, I think you would see that this is true. This is happening, right? This is a nightmare for growth investors, as there is no clear upward momentum, right? Driving the hunt for consistent cash flow over paper gains, right? Look, take back 1 year, unemployment was 3.7%, and it has just been slowly going up. And with the massive layoffs coming up from the government, I think it was like damn near 300,000 people got laid off, maybe more. This once the data shows, this is going to tick upwards to over 5%. Right? There are no jobs. There are no jobs right now. Right? The job seekers squeeze. This is the critical turning point, with 7.4 million unemployed and only 7.2 million openings, and you just can't hop jobs for a 20% raise. That time is over. Remember during the COVID, everybody was having multiple jobs or just job hopping. Work 6 months, jump to another job for a 50K raise, right? Your salary is no longer a reliable growth asset. This is why a new kind of external income source becomes critical. And this is why a covered call ETF isn't just extra money, it's a necessary supplement to a stagnant paycheck. I hope you guys are looking to creating a secondary income, because with the way the world is advancing and all these companies doing massive layoffs, jobs are not plentiful, and if it is, it's not high wage. And that's what's really forcing me to have this push for the $10,000 per month. And I really think everybody should be looking towards doing the research in covered calls ETFs. There are a great few. I have some videos posted on my YouTube channel on my portfolio and what I'm buying and what I plan to buy. Back to the video. I digress. The Tina era of income, the 2010s forced everyone to be a growth investor because there is no alternative. Tina. But in the 2020s, with AI threatening your job, that strategy is broken. I cannot emphasize this enough. All right, there is no point of buying growth stock if you don't have the money to buy growth stock. You eventually have to sell the growth stock, but you need a lot more money in growth stocks than you do covered call ETFs, right? Growth stock is there's no guarantee it's going to balloon. There's no guarantee. It could stay stagnant, and then what happens? Now, you can't pay your mortgage with potential growth. You need cash. And this is the problem covered call ETFs solve. Generating a predictable cash stream that can act as a second salary. Going back in 2021, the average one-year CD yielded just 0.17% and effectively zero return on saved money. And the reason why I'm saying that is because look at all the rate cuts, right? High yield saving account was probably good for about a year, maybe a year and almost a year and a half. But with these rate cuts coming, it's going to eventually go back down to what, 2%, 3%. Would you want your money there when you can get much higher yield consistently with rate cuts or no rate cuts? Think about it. The new income spectrum, right? We're using quarter 4 of 2025, and this is the why. The chart shows old safe assets are now the low yield assets, right? Covered calls ETFs are on a class of their own, designed to massively out-yield these traditional tools. These are clear answers for anyone seeking an income stream that actually makes a difference. Now, I use these two just because I'm not exactly recommending them. They work differently for different strategies for different people. I just use JetP and JetQ because they are the biggest. They're Chase, JP Morgan is one of the most well known. If you want to know what I'm buying and what I have in my portfolio, I have videos up on that on my channel. But I just use these two just for an example. I didn't specifically just chose these two because I own it. I actually don't own these two, so I just had these just because it was the biggest in name and in assets under management. All right, the real yield problem and the solution. Why isn't 4.25% from a CD enough? Inflation. A safe yield that barely beats inflation doesn't provide spendable income. This is the problem covered call ETFs are built to solve, right? The problem, CDs, you're getting about 1.25% after inflation. So what is the real yield, right? What are you getting compared to JEPI at almost a 10%, right? After inflation, you're still getting above 5% real yield. So you're getting money back. You are making your money back, right? So if you get $1 raise, but inflation went up by $1, you essentially got no raise. You probably lost at that point because you still probably have to spend more. The great migration of capital, almost $2 trillion isn't a trend, right? People are realizing, people are waking up and being like, yo, this is not working out, right? The traditional method of investing does not work, right? Growth stock is now a 50-50 because if nobody has money, who's buying the growth stock? If you eventually have to sell in 20, 30 years, but you need a job for 20, 30 years, how are you going to grow your growth stock? Welcome to Covered Call ETFs. I believe this is the solution. I believe Covered Call ETFs are going to be the staple in everybody's portfolio. And as you can see here, a vote of no confidence, $447 billion year-to-date inflow is a vote of no confidence in the old model, right? This capital is seeking a tool to fight inflation and job instability. This is why CC ETFs, a huge part of this active category, is exploding in popularity. Investors are buying cash flow. Don't show me your net worth. Show me your cash flow. I don't care how much you could have. Show me what you actually have. What you could have doesn't pay the bills. What you actually have, what you're getting paid out weekly or monthly, depending on what Covered Call ETFs you own, right? You actually have that money hit your bank account. It's liquid. All right, this is just how a Covered Call ETF works. The factory for income, this is a 4-step process. This is how I believe all or most Covered Call ETF works, right? So the fund, the ETF buys the stock, holds a portfolio, whether it's the S&P 500 or the NASDAQ 100. It sells the call, sells options, giving others the right to buy the stock at a higher price, a strike price, and then collect the cash, which is called the premium, right? The fund immediately collects cash, premiums for selling those options, regardless of what the market does next, and then it just distribute and pays out the dividend. All right, these premiums are paid out to shareholders like myself as high monthly or quarterly income. It's mostly monthly and weekly. I don't believe. I don't know if there is a quarterly. I just put monthly and quarterly just because the weeklies are very new. And I would rather have the monthly one. That's what I'm holding. It's a little bit more stable, right? So covered calls, talk about that later in the next slide, right? Or the previous, next few slides. All right, factual evidence, the solution to low wages. This chart is the solution. I'm putting, quote unquote solutions. When your salary is stagnant and CD gives you 1.25% on real return, a tool that generates 8 to 12% in cash is no longer a niche product. It becomes a financial necessity for survival and comfort in a new economy. Again, I don't own any of these ETFs. I just put the biggest name out there. Do your own research, okay? There's a thing called NAV erosion, and that is one of the trade-off with Covered Call ETFs. So, JEP and JEPQ, they have been doing well, but QYLD is just one of the first Covered Call ETFs to be out there, and I've just have that because it's one of the biggest names. Again, do your own research before buying it. If you know what I'm holding and what I'm buying, I have YouTube videos on that on my channel. Factual evidence, the salary replacement tool. This is the new salary. It is going to be my new salary, right? For every $100,000 saved, you can generate roughly $8,200 to $10,400 per year in spendable cash. This is life-changing amount because you don't need millions of dollars for the traditional 1 to 3%. You don't need $300,000, $500,000, $1 million for these growth stock, right? This is life-changing amount that can cover a mortgage, car payment, or utility bills. Again, this is just $100,000. Even with a low paying job, if you can hold it consistently and invest consistently, you could have $300,000 saved up. And if you don't want to live in the United States, you can quote unquote retire. You can go somewhere in Southeast Asia. So this is something to think about. Okay, so like I said, do your own research before buying these cover calls. Okay, there is a trade-off, right? The catch is the new strategy, right? The catch is what you cap your upside in. If the S&P 500 rallies 30%, you will not get that return. But this is the entire point of covered call ETFs. In an economy of AI disruption, growth is uncertain. A 30% rally is not guaranteed. What is guaranteed is these funds will generate cash premiums every single month. Investors are now choosing the certainty of high cash flow over the hope of volatile growth. It is a strategic pivot to income first mindset. And I hope everybody has that mindset, because a bull market, there's no guarantee of a bull market. Right? All right, my conclusion and the sources I used in for this analysis is all listed in the bottom. Right, the conclusion: the best tool for an income first world. I believe the old model is broken. Growth is a gamble. AI and layoffs are a threat. It's happening. Safe bonds are a myth, eaten by inflation. Right, with dropping rates. The new model is building a second salary that you control. Covered call ETFs are the single most effective tool for this mission. It's what I believe. They are the new essential component for any portfolio built for the reality of the 2020s. Layoffs are happening. Everybody's losing jobs. Nobody can even get jobs with all the supposed job posting there is. I mean, what I read on Reddit, Twitter, like there's a whole bunch of job posting, but nobody's actually getting the job. So where is the jobs exactly? And if you have a job, keep it. Do as much overtime as possible. Invest that money. Create yourself an escape. Create yourself an out. Nobody, unless you want to be in the rat race and stay there, then good luck. I mean, this video is not for you, but I am trying to get out the rat race. I'm trying to make work optional. I am trying to make it so that I don't have to beg my manager to take a sick leave, or I have to worry about, oh man, I gotta get this project done, and I gotta do a whole bunch of other stuff, and it's just waking up to alarms. I don't want to have an alarm clock. I want to have an alarm clock to be like, all right, I gotta wake up and get to the airport for my next vacation. That is my life goal. To not have to worry about going to work 5 days a week, being away from family and friends. I want to spend that time with my family and friends, and I believe everybody should have that income mindset first. Retirement is not an age. Retirement is a financial number. You can be retired at 30, 35 and still live a life of purpose. I believe that old mindset, that boomer mindset, oh, work till you're 65 to collect Social Security, that's not guaranteed. That's not guaranteed at all. For anybody under 40, we might not even get Social Security. That might not even be a thing in the next 30 years. So I just hope everybody, do your own research. I hope I've opened your mindset to open your view, educated you to covered call ETFs and why it's a staple to everybody's portfolio. Again, there are trade-offs. There are going to be the downside to covered call ETFs, right? So if you want to know what I own, I have videos on that, and welcome to the channel.